Ladies and gentlemen, good day and welcome to the Q2 and H1 FY'25 earnings conference call of Waaree Renewable Technologies Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference call is being recorded. I now hand the conference over to Mr. Viral Sankleja from Orient Capital. Thank you, and over to you, sir.
Thank you, Siddhant. Thank you. Good morning, ladies and gentlemen. I welcome you all to the earnings conference call of Waaree Renewable Technologies Limited to discuss the Q2 and H1 FY'25 business performance. Today on the call, we have from the management, Mr. Dilip Panjwani, Chief Financial Officer, Mr. Manmohan Sharma, AVP Financial Controller, and Mr. Rohit Waaree, General Manager, Investor Relations. Before we proceed with this call, I would like to mention that some of the statements made in today's call may be forward-looking in nature and may involve risks and uncertainties. For more details, kindly refer to the investor presentation and other filings that can be found on the company's website. Without further ado, I would like to hand over the call to the management for their opening remarks, and then we will open the floor for Q&A. Thank you, and over to you, Dilip, sir.
Thank you, Viral. Good morning, everyone. I would like to welcome you all to the earnings conference call of Waaree Renewable Technologies Limited to discuss business performance of second quarter and first half year ended for financial year 2025. I hope you all have got an opportunity to go through our financial results and investor presentation, which has been uploaded on the stock exchange as well as on the company's website. I wish to express my heartfelt gratitude to all those who dedicated their time to joining the call and have consistently been part of our journey. I have along with me Mr. Manmohan Sharma, Financial Controller, and Mr. Rohit Waaree, General Manager, Investor Relations, and other members of the management team as well on the call. It's an exciting time for India, which is now the fifth largest economy in the world as recognized by International Monetary Fund in its 2024 World Economic Outlook. The IMF had reaffirmed India's growth forecast for 2024 at 7% in July. The improved prospects for private consumption, particularly in rural areas, was key factor in this forecast. The IMF expects a slight moderation of growth to 6.5% next year. Our energy sector is an inspiring example of this momentum, driven by a strong commitment to sustainable and self-reliant growth. In line with the government's focus on energy transition, the renewable energy sector has seen unprecedented support and development. As of August 2024, India's installed generation capacity has reached an impressive 451 gigawatt, with renewable energy installations, including large hydro projects, contributing a significant 44% of this overall capacity. This achievement underlines our shift towards clean energy, with solar power playing a central role. Over the past decade, renewable energy installations in India have increased fivefold, reaching nearly 200 gigawatt as of August 2024, compared to around 63 gigawatt in March 2012. This remarkable expansion has been supported by forward-thinking policies both at central and state levels, which have incentivized and driven renewable energy adoptions across the country. Solar capacity alone has grown substantially, now contributing approximately 89 gigawatt to our grid as of March 2024. Looking forward, the momentum is only expected to accelerate. By fiscal year 2029, renewable energy capacity, excluding large hydro, is projected to exceed 320 gigawatt, facilitated by a range of supportive government initiatives. The roadmap includes attractive tariffs, innovative tenders, and development of solar parks and green energy corridors, all of which are essential for building interconnected, resilient energy infrastructure. By 2029, renewable energy is expected to account for about 50% of India's total installed capacity, estimated to reach 660 to 670 gigawatt. Our company is at the forefront of this transformative shift. We are leveraging our expertise to contribute to this growing green energy landscape aligned with India's self-reliant vision. From advancing solar installations to exploring new innovative projects, we are dedicated to strengthening India's clean energy sector and reducing our carbon footprint. As we move forward, our commitment to driving a sustainable and prosperous energy future for India remains unwavering. Now, I would like to take you through our business performance for this quarter and first half of financial year 2024-25. Starting with our order book position, we have an unexecuted order book of 1.7 gigawatt peak. We have successfully executed EPC orders of 705 megawatt peak in the first half of FY'25. In this quarter, we are delighted to report highest ever quarterly revenues of 527.47 crores, representing a growth of nearly 3.5x year-on-year as compared to 150 crores in second quarter of FY'24. EBITDA for second quarter FY'25 stood at 71.57 crores, representing a growth of 133.27% year-on-year as compared to INR 30.68 crores in second quarter of FY'24. PAT for second quarter FY'24-25 stood at INR 53.52 crores, representing a growth of 160% year-on-year as compared to 20.54 crores. The first half of FY'25 revenues stood at 760.82 crores as against revenue of INR 279 crores in comparative period during the first half of FY'24, representing a growth of 172.7% year-on-year. EBITDA for first half of FY'25 grew by 155% year-on-year from INR 44 crores in first half of FY'24 to 112.65 crores. PAT for the first half of FY'25 grew by 175.29% year-on-year from INR 29.67 crores in the first half of financial year 24 to 81.68 crores. Thank you all for joining us today, and we look forward to any of your questions. Thank you. Over to the moderator.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Our first question is from line of Sagar Tanna from Alchemy Ventures. Please go ahead.
Hi sir, congratulations on a great set of numbers. I may have missed out the opening comments. Can you tell us what is the current order book?
The current order book is 1.7 gigawatt peak unexecuted, that is lying as of 30th September 2024.
And in terms of crores of rupees, how much would this amount to?
This would roughly now translate to around 2,700 odd crores, between 2,500 to 2,700 odd crores.
Got it. And what is the pipeline, sir? The second half, because a lot of bidding happens in the second half. How do you see the second half in terms of the pipeline?
See, it is not driven by any seasonality that we picture out between first half and second half, because these tenders are coming out from mostly PSU segments. But as you rightly said that, the pace is increasing now, and our pipeline, which you asked, is now 17.8 gigawatt now.
Wow. Got it. And do you see any constraints in terms of taking further orders?
Constraints in terms of what you are forcing so that, we can adequately address the same?
Sir, constraints could be anything, material, resources, manpower. Do you see any constraints of bidding for further orders?
So, Sagar, we look this business in two ways. We always articulate that we have built a very robust platform which can scale up very quickly, and we have adequate manpower to scale up very good pace from here. In terms of limitations, in terms of supply chain, etc., which you are referring to in the second part of your question, we are until now not forcing any significant bottlenecks towards that end, as of now. So, going forward, whenever it is something happens, we will keep you posted. But both in terms of platform scalability, we are very excited. We want to reiterate that, we are positioned to accelerate energy transition in India right now.
Got it. Thank you. And all the best.
Thank you. Participants who wish to ask a question may press star and 1 at this time. Our next question is from the line of Akshay from CD Integrated Services Limited. Please go ahead.
Hello, sir. Am I audible, sir?
You have to be a little louder, huh?
Sir, Is it better now, sir?
Yeah, much better.
Yes, sir. So congratulations on the great set of number. I mainly have two questions, sir. And the first question is, despite the highest ever quarterly revenue at 524 crore, our EBITDA margin have reduced to the 5 quarters low. So can you give some colors on that as to how EBITDA margin can step up over the next 4 to 5 quarters?
And what is your second question?
Sir, how EBITDA margin trajectory we can expect over the next 4 to 5 quarters, because despite the 524 crore revenue, highest ever.
Next questions, Akshay.
Yes, sir. So next question is on our EPC cost. So in our financial statement, we have the line item of EPC cost. So what percentage of the EPC cost is from the outsourcing? I mean to say that what is our sourcing from our company itself, and what is the outsourcing of the materials? Like we also have the manufacturing plants of solar cells and solar panels and all these things. So these are the two questions, sir.
Well, Akshay, commonly, most of them may have this question, so I would like to address the EBITDA margin aspect in the first place. We have consistently reported a very higher level of EBITDA margins in the past, but we have consistently maintained that our EBITDA margins at a sustainable level should be double digit, almost near to 15% levels. That's what we have consistently maintained. So we are in line with our thought process. I can estimate until our present order book where we will maintain these kinds of EBITDA levels. The new order book, as and when it comes, we will keep stakeholders posted. So as we said that this 1.7 gigawatt is right now good for next 9 to 12 months. So you can predict that for this order book, these EBITDA margins will be maintained. But when the mix changes in the new order book, we will keep the stakeholders posted. So that's the take on EBITDA margins as of now. We are still happy with this EBITDA margins. Reason being, the volume has significantly increased. And being a platform, we are not seeing any other metrics go up in terms of capital requirement or anything else. So consistently, EBITDA is going up and PAT is going up, on the financial parameter side. So I hope that addresses your EBITDA question. Coming back to outsourcing front, Waaree Renewable Technologies anyway doesn't manufacture anything. We outsource in terms of equipment, everything from outside. But in terms of EPC execution, we do it in-house. Little bit of civil work here and there, I can't quantify in terms of percentage, but that could be a very low percentage of work that we outsource to outside parties. In terms of equipment, of course, our group company does manufacture modules, but if the client insists as a pass-through through our balance sheet on the module side, on an arm's length basis at a completely, related party, because it's a related party, and absolutely at an arm's length basis, we buy from Waaree Energies. So the rest of the equipment, which is, high lead equipments like transformers or inverters, cables, etc., are anyway procured from outside as of now.
Okay, sir. Okay. Thanks for the answer. And sir, last one short question is, how do we see our order book for the next 1 to 2 years? At the end of the first quarter, we had 2.2 gigawatt around order book, and currently we have 1.7. So how it can shape up over the next 1 to 2 years?
See, since about 3 quarters to 4 quarters, we have been consistently mentioning this. The sector offers significant opportunities, and where does these opportunities arise from is government's commitment to energy transition to renewable energy space. And there government has certain targets. One of the targets, of course, very well known is 500 gigawatt of renewable energy by 2030. Besides that, government also has up to 2070, they have a vision that they want to go net neutrality, in terms of renewable energy. By 2030 or by 2029 itself, government wants more than 50% of energy to be driven by renewable space where we are present. And apart from that, since last year, government has committed that they will increase the business of renewable energy in terms of procurement of power up to almost 40 to 50 gigawatt per annum. So that's our quick and easily addressable market. Then there is some other market like, Kusum and rooftop projects that are going to come up. So we are very excited, and that's how we have been consistently engaging with our customers. We have our now, as I said, pipeline has increased to 17.8 gigawatt. So we are very hopeful that this sector offers significant opportunities over the next couple of years, which was your question.
Okay, sir. Okay. Thank you for the answers.
Thank you. Our next question is from the line of Alisha Mahavla from Envision Capital. Please go ahead.
Hi, sir. Good morning. Thank you for the opportunity. Just taking off from what the previous part.
Sorry to interrupt, Ms. Alisha. Your voice is a bit feeble. If you can.
Am I audible now?
Yes. Please go ahead. Yeah.
Great. Yeah. So I just wanted to know what the previous participant was asking. We are currently, our earlier aspiration was to execute 1.5 to 2 gigawatts for this year, and we should probably be in the range of doing that. With the order book of 1.7 gigawatt that we're currently sitting and 17.8 gigawatt of pipeline, how much are we expecting this pipeline to come for bidding in H2? Otherwise, the growth for next year on the current base may not look, may sort of be flat. So any thoughts or color on that?
Yeah, sure. Alisha, when we started this current financial year, we started with roughly 2.3 to 2.4 gigawatt, and we are now down to, but how did we arrive at 2.3, 2.4 is also in March we secured very big orders, and that's how the nature of this industry is, that there is a time gap to fruition of the business, and that's, roughly 6 to 8 months, and we are in active discussion with our clients, and we are hopeful of converting them few to orders as well. So, and the market is quite big, 17 gigawatt alone we are chasing. The whole market is more than that, double than that, in fact. Because when I said in the previous question that government is incentivizing up to 40 to 50 gigawatt of renewable space, that is only in the renewable space, but add to that the new tenders that are coming in the market are more towards RTC, hybrid, plus battery energy storage systems, pump storage systems, floating solar is yet to come up in a big way, and a rooftop market is yet to get explored. That is roughly around 30 to 40 gigawatt by some estimates. So the outlook is definitely brighter, and the 17 gigawatt, which was your question, I said, it takes time, 6 to 8 months. These are big orders, but we have also organized internally in terms of lower megawatt orders into a separate vertical. So our focus is going to increase towards that as well going forward.
So how much of this 17 gigawatt will be up for bidding in H2, or all of this we can hope will be bid in H2, and then we'll have some hit rate in this?
See, there is always a hit rate, definitely. Our hit rate in the past has been around 25% odd, but depending upon which is numerator and which is denominator, 25-30%, which is within our hit rate. The entire one is for second half anyway, but things keep changing, new orders keeps getting added, lapsed order keeps getting go out, but the entire one is for second half itself.
And this current unexecuted order book of 1.7 gigawatt will be able to execute a large part of this in H2?
Yes, since it is 9 to 12 months, you can apply some proportion, 6 months are left, so, you can do 6 divided by 12, but we are hopeful of around, 1.2 to 1.3 gigawatt.
To be executed in H2?
Yeah.
Understood. Sure. And are we seeing any slowdown? Because you said that the sector largely depends on government initiative, and while they have a long-term commitment to it, in the last few quarters, have we seen any slowdown in orders, or are we expecting that this year could maybe be flattish and then again a pickup from next year? Any on-ground color that we can give?
We haven't observed any significant slowdown in this sector in terms of investments from government or from private other parties as well.
Okay. And any comment on the competitive intensity? Because we've heard a lot of smaller players have also entered this space. So is that impacting our order wins or profitability in orders that we're winning?
See, competition, in the sector which has significant tail will always emerge, which is good for industry because it brings out efficiencies and productivities in place. But there are certain barriers as well, You want to bid, you need to qualify, The newer players will always find it difficult to qualify in that space, The second is projects are getting gigawatt scale, We are chasing now gigawatt scale projects. So when a customer wants to outsource his EPC, he will also see the experience and the deliverability of that particular product to himself, because these are not small projects. These are almost like 3 crore to 3.5 crore per megawatt projects now. So when you go to 1 gigawatt, that will turn out to be almost like 3,500 to 4,000 crores for them, so as an investment. So, and plus these are now coming with complexity of battery storage, because these are RTC and these are hybrid projects as well. So competition is good. This will keep us on good footing and improve efficiencies. But we are not too much worried about competition as of now.
And how much of our order book is utility versus IPP?
Bulk of it is utility.
Bulk of it is utility. Understood. And just one last question. Are we already getting orders of witnessing any uptick on the rooftop solar?
Yes, we are witnessing rooftop solar as well.
Is that part of the order book already? Are we getting?
Part of the order book as well.
Okay. Okay, great. Thank you so much and all the best.
Thank you. Our next question is from the line of Shivani from Monarch Network Capital. Please go ahead.
Hi, sir. Congratulations on good sets of numbers. This question is in continuation to the earlier question. So I wanted to understand more from the industry perspective. Are we on the track of 40-50 gigawatt addition for FY'25? Because as per market sentiments, I've read that it will be anywhere in between 25 gigawatt in terms of capacity addition. So could you throw some light on that?
See, this always remains a matter of debate. When we were adding, proposing that, government will add 20 to 30 gigawatt, the actual executions were 10 gigawatt. Then suddenly government commitment opened up and government said, we will be in the range of 40 to 50 gigawatt. And if you look at the tender data, that has actually kept up the pace. So, slight 5 gigawatt here and there will not matter much, but actually tenders are coming up in a significant way, So we have not until now witnessed that 40 to 50 gigawatt is going down to 20 gigawatt or something like that. But 20 gigawatt is also itself a big market, But definitely I want to reiterate, having said that, we are witnessing trajectory towards 40 gigawatt levels.
Okay, sure. Thank you. My next question is on order mix. How much is from PSU, CNI and residential, and what's the margin across these orders?
See, at a broader level, I can guide you that our current order book is between 15 to 20% in PSU side, and the rest is towards either utility scale or rooftop or other projects. But we don't have a detailed breakup as you are asking. I hope that answers, the PSU and the balance split.
Sure, sir. Yeah, that was helpful. And also, could you comment on the mix between BOS and turnkey orders, and what is the margin profile for both of these orders?
See, as far as bulk of our orders are concerned, they are balance of systems only. The turnkey orders are few. Clients prefer to go on module on their own. Once the module is out, it is mostly the balance of system orders. And margin profile in fact is better in balance of system. But we always go by a mix of margin, and we track up to EBITDA level, which we have already discussed in the first part of the session.
Sure, understood. Sir, my last question is, are there any plans for international EPC? Are we any update on that?
We, in our presentation, we have already articulated that we have aspirationally, we want to do international also. That's a large market for us, especially Middle East and on the African side. but we are not yet forayed in as such with a firm commitment of capital as yet. But whenever an opportunity arises, rest assured we will keep the stakeholders updated. Aspirationally and directionally, we are headed towards that. But as of now, our 100% of order is from domestic sources.
Understood. Thank you. That was all from my side.
Thank you. Before we take our next question, we would like to remind participants that you may press star and 1 to ask a question. Our next question is from line of Prince Chaudhary from Pink Wealth. Please go ahead.
Yeah, hi. Thank you for taking my question. I have a couple of questions. First, from the industry point of view, I want to understand, since the raw material cost is around 70-74%, so I want to understand how is the domestic supply chain. Is there any issue or related to that?
See, the domestic supply is currently geared, towards meeting the supplies. Since 1st April, ALMM has started and modules get covered under that. The rest of the equipments are not covered under ALMM or any domestic content requirement. The rest balance of the supplies are also procured domestically, and we have historically procured from domestic sources only. And we have addressed this in the past also in the first session of the call, that we have not witnessed any supply chain issues or any meeting difficulties towards other part of the equipment. So on the both front, module supply front and on the other supplies, as of now we are not witnessed any significant things in terms of import versus domestic or something, but domestic is geared towards supplying all the requirements.
So you mean to say, even going ahead, the domestic supply will be catered to all the industry participants. Is my understanding correct?
Yes.
Okay. And if you can explain about the bidding process, like how long it takes to bid, and then when we are getting the orders.
See, bidding of tender, from the date of publishing to date of signing of the LOI, it takes roughly about 4 to 5 months.
4 to 5 months? Yeah. Okay. And since you have the order of 1.7 gigawatt for 9 to 12 months, how we are going to finance the project, whether it is internal accruals or debt or anything?
We need to decipher the business model where Waaree Renewable is placed. We are not spending anything on these projects. It's the clients who are spending. I just need to sufficiently be capitalized to the extent of my working capital requirement, because it's a cycle. As soon as I procure materials, the client pays Waaree Renewables, and my investment is not there in the project. It is the client's investment. So I don't have to be bothered about, I just need to be taking care of my working capital requirements if required.
All right. That's it on my side. Thank you.
Thank you. Our next question is from line of Sarang Jogwekar from Vimana Capital. Please go ahead.
Hello.
Go ahead.
Yeah. So just building upon the previous question, how much advance do you receive on the EPC orders, and is there any difference between PSUs and private sector?
Well, there is definitely difference between your second question. There is definitely difference between PSU and private segment. PSU's mandatory requirement is contract performance bank guarantees, which sometimes is there in private sector contracts and sometimes it's not there. From a percentage perspective, advance ranges hovers between 5 to 15%, but thumb rule is 10%. And performance bank guarantees we have observed has been around 10 to 15%, thumb rule again 10%, but it's been coming down also in certain projects.
Got it. Also on market side, so green hydrogen is one more growth driver for solar EPC, right? So just wanted to understand how big of an opportunity that is, and have the orders demand from that market started to come in?
Hydrogen is a great opportunity that we are looking at, because we have group capabilities in terms of hydrogen. But from a demand perspective, we are expecting it to scale up. But as of now, a significant demand on that front has not scaled up. in terms of orders.
Got it. Thank you.
Thank you. Our next question is from the line of Rohan Vora from Envision Capital. Please go ahead.
Hello. Am I audible?
Yeah, you are audible.
Yeah. So thank you for the opportunity. So, sir, just slightly a medium to long-term question. So you earlier mentioned that, the current margin guidance is for the order book that we have in hand, and then as and when we win new orders, you will guide us on how the margin would move. What is your, your view on that? How do you see the margins moving in the upcoming pipeline? Has the competitive intensity impacted the margins, and just color on that? Thank you.
See, I've already addressed that part as well, but I will reiterate, if you look at historically, we have been at more than 20% or around 20% margin levels. Give and take, in certain quarters we were at 20, certain quarters we were at 18. Last year we were at 23. So at that time itself we foresaw what is coming, and we had been guiding that sustainable and going forward margin that must be seen is at 15% odd levels, but still double digit. And our target, internally is also to keep moving in that direction. Okay. We have been very conscious of what kind of projects we undertake. We don't want to undertake projects for the sake of taking up the projects, and that's how historically the company has operated. So we foresee that we will still be in double-digit margins going forward. That's how we want to undertake projects. But as and when competitive intensity further increases or puts pressure on the margins, we will keep you posted. But I can only tell you how internally the working of the company has been throughout.
Right. Got it, sir. And sir, just a bit of color on the gigawatt scale projects that we are bidding and we are working on. So how's the atmosphere around that? If you can give some color on that.
So traditionally the company works from 1 megawatt level till any size, but gigawatt level more we are pronouncing because that's how the projects are coming into the market space now. And clients are willing to trust us for gigawatt scale. That's an endorsement for the company. And in our pipeline also, we are seeing that there are quite significant big level projects, 500 megawatt, 1 gigawatt, or higher than gigawatt as well. So that's what we articulated. That's how we are discussing with clients now.
Got it, sir. And the competitive intensity in that gigawatt scale, how is that?
There are fewer players, but there are players. There are 3 to 4 players in that segment, 4 to 5 players, but there are players in that segment.
Got it, sir. Thank you.
Thank you. Our next question is from line of Khadija Mantri from Capri Global Capital. Please go ahead.
Yeah, good afternoon, sir. One question is that receiving very... yeah.
If you are on speakerphone, maybe,
Okay. Just give me a minute. Hello?
Yes.
Is it clear now?
Yeah, it's clear now.
Okay, sir. Yeah, so my question was regarding the increase in trade receivables, so from March 2024 to September 24. So is it of some project-specific receivables that we are expecting, and then it would come down at the end of the financial year?
See, the trade receivables are as of that date, yes, true, but the quality of trade receivables is that there is a certain portion which is not even due, Then there are defect liability period margins that we have to keep with client, in the nature of 5 to 10%. That must be around 80 to 85 crores in that receivables. So if you account all those, the trade receivables are not at that great percentage. And in fact, a significant chunk, maybe in the region of 150 crores, we have already collected in the month of October itself.
Okay, sir. And what is the typical working capital cycle?
Working capital cycle is actually within 21 days we get payment. Technically, our working capital cycle is actually we have a negative working capital. It means we don't need capital to do this business. It's how I will explain you. When we give these BGs, we get 10% money in advance. and certain payments in the range of 40 to 50% is covered by MDCC or delivery at site. Almost up to 70% between these two components, delivery at site and material dispatch certificates. So once the material is dispatched, we get payments, or the delivery at site material, we get payment. And that payment becomes due between 21 to 30 days. And we pay to our creditors around, 40 to 45 days, so that gets covered. Then the service payments and design payments, add to all those things, and as soon as you submit designs, various, engineering designs, be it civil design, you get paid. That is balance around 20% of the payment. Then balance last 5 to 10% gets blocked in your defect liability or workmanship kind of margins that you have to keep with client for between 9 to 18 months, depending upon the type of client, etc. So what we get held up is only the last portion. But while doing business, our investment is not very significant, or if it is there, it is for very minimal period.
Okay, sir, understood. And also in the current order book, is it possible for you to share the O&M part, or it is not very significant?
So O&M is at 587 megawatt. Also what happens is that when we undertake EPC clients, they give us, majority of them, not all of them, give us between 3 to 5 years of O&M to us. So mostly, once these projects gets completed next year, we will see an uptick in O&M as well. And the company also keeps actively bidding for O&M customers outside. So we are hopeful that, this should also see a 2 to 3 times growth next year onwards.
Okay, sir. And also one question, in the press release, it is mentioned that EPC work invoiced to clients, so which is not a part of revenue. So how much time does it take once you invoice the work to clients and revenue booking? What is the gap typically?
See, this we have added for, stakeholder transparency that, this is a constant thing that's happening, The accounting standard says that, you have to bill on percentage completion. You have to book revenues on percentage completion method. So whatever has been booked as revenue is the work that is completed. Whatever we have invoiced to the customers, we would have in fact received money also against that. So whatever is invoiced to clients, once we spend that money or we complete the work, this would get booked as revenue as well. But that generally happens in a pace of, 30 to 45 days time frame.
Okay, sir. Fair. Thank you so much.
And in fact, if you notice that invoicing front, we have already crossed last year's revenues.
Right. I noticed that. Yeah. So I just wanted to know what is the gap between the invoice period and then the same turning into revenues. So you said it's 30 to 45 days.
Yeah.
Okay. Thanks.
Thank you. Our next question is from the line of Vishal Chaudhary from A to Z Trading Ventures. Please go ahead.
Okay. So first of all, sir, congratulations on the good set of numbers. So my many questions are already covered, but can you just let us know in last 2 con calls as well, you guys told that you are having a very large, you can say pipeline, somewhere around 17 GW or 18, something like that. So like we saw that in the last 2 quarters, Waaree was not able to win good, you can say big orders. So is it because that bidding did not happen, or results were not favorable?
Look, though I have addressed this, again I would like to reiterate in a different manner. I've already addressed this. Waaree believes in, profitable contracts. We don't believe in the business for the sake of taking. That's one. Second thing, I also did mention that the cycle of conversion in this business is, for tenders it's almost 5 to 6 months, and for non-tenders also the cycle is 6 to 7, 8 months. I referred that. So it takes time to convert them to orders, but when the order comes, the work immediately starts and they start booking revenues. So that's the reason that we have not been, able to announce any significant new order. But we are hopeful that, our pipeline is pretty strong. The tailwinds are also equally strong in this sector. As I mentioned that new avenues are opening up on the battery side, storage side, solar side. So those are the things that are, keeping us, enthusiastic in this business.
Okay. So is there any particular band of projects in terms of capacity you are chasing? So we can see that there are some smaller companies which are also listed. So they are winning a lot of like 10 megawatt, 20 megawatt, which typically take less than 6 months to execute. Or there are some bigger companies as well which deals in, you can say, gigawatts only. So is there any particular band of projects that you are particularly bidding for, or you have a preference?
So technically, typically we don't go below 600 kilowatt level. I actually mentioned that our focus is 1 megawatt onwards. I also mentioned that we have internally reorganized a division which will focus between 1 to 50 megawatt. That we have recently organized, so it will take little bit of couple of quarters time to see fruition. But if you look at our order announcements, the smaller projects we have already announced in the past. 130 megawatt order we have announced in July also. So those are also coming in, and our focus on rooftop is also increasing now because rooftop also presents a significant 30 to 40 gigawatt opportunity over next 3 to 5 years.
Okay. So can you give some maybe closer to firm number? Like what out of this 1.7 gigawatt you can cover in next 5 months? Like the earlier range you gave was very, very big, right? It is 9 to 12 months. Earlier also it was 9 to 12 months, but like it did not materialize in last 2-3 quarters. So like, can we expect?
9 to 12 months when we refer, it is the execution period of the existing orders. So as and when order keeps getting added, that period keeps increasing, So there's no delta between what we have mentioned in the past and now.
That's fine, sir. But if you'll add the new order wins minus the executed, so that number is somehow, you can say, not matched. So that is why, I'm asking, in the next 5 months, is there any range, closer range, not very bigger one, like the previously you told that maybe 700-800 to 1.2. So can you maybe just give some accurate range kind of thing?
Your question relates to pending execution that is pending for 1.7 gigawatt?
Yeah, pending. In the current financial year.
Yeah, so we did mention 1.2 around gigawatt is what we should be executing in next 6 months.
Okay. Thank you, sir.
Thank you. Our next question is from line of Sahil Gora from MNS Associates. Please go ahead.
Hi, good afternoon. Am I audible?
Yes. Yes, sir.
Yes. Firstly, congratulations for the good set of numbers. I just had a couple of questions. Sir, can you tell me what are the potential short-term and long-term implications of Mr. Trump returning to the presidency on the business?
Look, as far as US elections is concerned, I don't think Waaree Renewable per se will have any significant impact. The reason being, in the previous session of our Q&A, we had said that we are more domestically focused company right now, and it is more driven by Indian investments right now. Our focus internationally also, when I mentioned that aspirationally we would like to reach out, if at all, is Middle East and Africa. We have not said US as such. So whether any party wins in US, as far as impact on Waaree Renewable is concerned, we are not witnessing any impact on Waaree Renewable Technologies.
Okay, understood. And my next question is, could you break down the order book across the 3 business segments, EPC, O&M, and power production? And also, if you could provide details on the portion attributed to private players versus government contracts.
So, private versus government, I've already addressed. It is between, 80-20 kind of 80 private and 20 government, 15 to 20 rather, is government, rest is all private. And second is your order book. We have said that 1.7 gigawatt is unexecuted portion. That is a mix of everything. And then, on O&M, we have got 587 odd megawatt of assets portfolio under our management. IPP, we have got 40 megawatt, which gives us annual revenues of around 16.5 to 17 crores. That's the portfolio of the company as of now.
Okay, that helps. Thank you and all the best.
Thank you. Ladies and gentlemen, that was our last question for the day. And I would now like to hand the conference over to Mr. Viral Sanklecha for closing comments.
Thank you. I would like to thank the management for taking out the time for this conference call today, and also thanks to all the participants. If you have any queries, please feel free to contact us. We are Orient Capital Investor Relation Advisors to Waaree Renewable Technologies Limited. Thank you and have a great day.
Thank you.
On behalf of Waaree Renewable Technologies Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.